Okay, right, lads, it's a continuation from yesterday's class. So I'm just doing it out in this format because it's a lot quicker and saves a lot of hassle, okay? So we finished up with all these yesterday. Alright, so like all my payment section. Okay, so again, lads, what I want to explain here is these are payments, they're not actually expenses. So do you know the way when we were doing our purchases, solving wages, variable overheads, fixed overheads? Right, what I didn't explain yesterday was, see these fixed overheads, it includes depreciation, okay? So like it in brackets, it includes depreciation. Now if we look at this is called payments, okay? Now, depreciation is an expense, yes, but do I actually pay for it? Is it coming out of my, is it coming out of my actual account? No, it's costing me money, but I don't actually physically have to pay for it. Okay, so that's why it has to be taken away from my fixed overheads figure. Is that okay? Equipment is a once-off payment, that's fine. Loan repayment then, so what I'm going to do is for the two of these and the variable overheads, just so you can have a look at it, I'll do the workings for 1 month down here, okay, and I'll do them after, once I've done all these accounts as well. Okay, so, right, we've done my receipts, total them all up, done my payments. Now I didn't finish this part yesterday, but all I'm doing here for my total is just adding all these columns up together. Okay, so the receipts is completely separate, so that's what the double line is for there. Okay, then I want to add all my August up and I get 301675. I want to add all my September up and I get 439270. Okay, so that goes all the way across. Again, these double lines mean that it's specifically for either payments or receipts. Now, for net cash then, right, so this is just the layout as it's pure repetition, you get used to the layout. So net cash then, right, what is net cash? This is the amount of cash I have after my payments. So how do I do it? I go to my receipt section and I get 79,800 euros, double line underneath it, and I would take 250480 from it. Okay, so if I throw it into the calculator, I should come out with a negative. And again, lads, if it's negative, put it into a bracket, 170680, 170680, and again, the brackets just means that it's a deficit. Okay, now, the reason I bank loan down here, because it's technically not a receipt, right? It's not a payment, but it does increase cash flow. Okay, so what I have to do is I have to put it in down the bottom. So anything that increases cash flow has to go in down the bottom. Okay, so the bank loan, if you have a look here, it specifically states that we purchased the loan on the 1st of July, okay, for 36,000 euros. So again, in my July column, I'm going to put 36,000 euros in down here because it's going to increase my cash flow. 36. No, we're not given, no, for my opening cash. So I'm not given any details from June, okay? So I technically don't have any opening cash, right? So if I throw those two figures into the calculator, I get my closing cash for the month of July, and that's 134,680. 134,680. Okay, so like that's July done. Now what I normally do is I normally do all my net cashes together. Okay, so I do my August 251,600 minus 301,675. Okay, now you can do it month by month or you can just do it line by line. So I'm going to do it month by month. So if I do August, receipts minus payments, and I get a total of 50,075. Again, in brackets, 50,075. So that's a deficit. All right, I have no bank loan, but I do have opening cash. So again, if my closing cash for the following month, for the previous month, is going to be my opening cash for this month. Okay, so 134,680. Is that okay? And then my total closing cash is going to be two of those added together, and again, it's another deficit, 184,775. 184,755. That's my closing cash for the month of August. Okay, so if I move on to September, receipts minus payments, and I get a total of 114,930. And the reason that's a surplus, lads, is because it's the first month where I actually have 3 items of receipts in it. Okay, so like we don't have any here, so that's why it's like the first couple of figures are always going to be deficits for your net cash, and they'll slowly, hopefully, get better and increase as well. Right, I've no bank loan. What's my my opening cash? It's from the previous month's closing cash, and it was for 184,755. 184,755, and then throw it into the calculator, and I get again another deficit, 169,825. Okay, go to October, receipts minus payments, and I get a total of 39,235. 39,235. No bank loan. Closing cash for the following month, so my opening cash, so 169,825. And as you can see, my closing cash is slowly getting better. Okay, so 130,590. Okay, going to November. Receipts minus payments in November is going to be 76,490. 76,490. No bank loan. My closing cash for the previous month's October, so 130,590. Again, I still have a deficit, but it's for 54,100 euros, so it's not as bad. It's slowly getting better. Okay, receipts minus payments for December, and I get a total of 53,195 euros. No bank loan. My closing cash for the following month is 54,100. And then my total down the bottom here should be 905 euros in a deficit, and I want to double underline that for 2 seconds. Now, how do I check if I'm right? Okay, if I do the exact same for the total column. Okay, so my total figure for bank goes here is 36,000 euros. If I total up all of these figures, they should, like, this is why the total column comes in handy. If I throw all these figures into the calculator, I should come out with a negative 36,905. 36,905. Okay. Now, if I throw that my receipts minus my payments into the calculator for my total column, I should also come out with 36,905. So if I total all these columns up, and if I receipts minus my payments take away from my receipts, I should get the same figure. It's a good way of checking if you're correct. I've no opening cash. Sorry, throw it into the calculator. I should also get a 905 deficit. That's how you check if you're correct. Okay. Now these figures are very, very handy for when we do the profit and loss anyway. So hang on to that for 2 seconds. Okay. Now what I want to do is flick over to the profit and loss account. Okay. And if you want to take this down, you're more than welcome to as well. So this is the layout. Again, sales. And then the next heading is going to be less expenses. So any expenses we have in accordance to no, this is the layout I like to use. Okay. Now where do I get my sales figure? Okay. So my sales figure, as you know, is obviously going to be from the top here, right? So even though my sales figure is total 3,275,000 euros, okay? So if I throw it over here, 3,275. Now somebody might be asking, how come we're not taking the total sales here? Okay? Because we need the total sales for that accounting period from June to December. Even though we're not getting paid that amount in that period of time, the transaction happened within that date, or the predicted transaction is going to happen within that date. Okay, so like this is like the accruals. It has to be within the accounting period. Okay, so even though we're not getting paid for it now, it's still related to sales that occurred during the year. Okay. Our expenses then. Okay, so these are kind of handy enough, right? So we've got material, which is just our purchases. Okay, so the first one's going to be material, which is just going to be our purchases. Where do I get that? If you have a look at the question here, my purchases figure, just taken from here, 1635. Same track with the sales, lads. I mightn't be paying for it all. So like in that period from June to December, but the transaction happened from June to December. Okay. Labor or wages is the next one. Wages, labor. Where do I get that? I just calculated it out here. Wages, 60,000 euros for 6 months, 360,000. Okay. So 360. Okay, what other expenses do we have? So have a look here. What other expenses do we have? So we've purchases kind of done, tick. Wages done. So we've variable overheads and fixed overheads there next to. Okay, variable overheads and fixed overheads. And this is why I always do the total column. That's why, because my figures are both here for them. So variable overheads 655, fixed overheads 385, 800. Okay, so that's where they're coming from. So variable overheads 655, fixed overheads is 385, 800, 385, 800. Now you could, like, this is the way I do it. I just do sales less expenses gives me my gives me my net profit. Okay, I don't do this is just the way I like to do it, because you can list off all your expenses together. Okay. Now, had we any other expenses during the year? Okay, and that's the key one there. All right. Had we any other expenses? All right. Loan repayment. That's not a direct expense, okay? But what is an expense is going to be the loan interest, all right? So I want to highlight the loan interest there. So that's going to be the next one, loan interest. And it was for the total amount of 1005. Okay, 1005, all right? And the next heading is going to be discount allowed, okay? Now, I hope to God you kept track of your discount. If you don't, that's all right. So this is just the discount. So remember all the I think it was 5% cash discounts for all up here. Okay, so like all these discounts. Now don't worry, I have them all calculated anyway here. All right, so I'll just do it down the bottom. So the figures were 4,200, 4,400 for August, 5,800 for September, 5,900 for October, 6,200 for November, and 6,250 for December, right? Total all that up and you get 32,750. Okay, so that's my total discount allowed, 32,750. Okay, after that, then that's fine. Any more? Okay, so like this is where it's like what I want to draw your attention to is the fixed overheads, right? So including my fixed overheads was including depreciation. Okay, including depreciation. Now, unfortunately, right, that's not a payment, but it is an expense. So very, very like the profit and loss accounts that we were doing for published accounts, for question ones, anything like that, lads. You have to treat your depreciation as an expense. Okay, depreciation and equipment, and that was for the total amount of 4,200 euros. Okay, how did I get that? Is, don't forget, it was just the value of the new equipment, which is 42,000 euros. Divided by 5 years is 8,400. Divided by 12, multiplied by 6, because there's 6 months. We're doing, sorry, I can't even see that. Sorry, 42,000 for that, divided by 5 is 8,400, divided by 12, multiplied by 6. Why? Because we're doing it for 6 months. Okay, so technically in here, there was 700 euros taken off off all these, okay? So 700 taken off that, 7, 14, 21, 28, 35, 42, so 4,200 euros. Okay, so depreciation and equipment was 4,200. That was absolutely fine. So if you threw all that into the calculator, you should have got, I don't even have this done now, sorry, I'll just do it really quickly. 1,635 plus 360 plus 655 plus 385, 800 plus 1005 plus 3275 plus 4,200 equals 307,3755. So 307,3755. Take that away from the above figure of 3,275, and I get 201,245 as far as I know. Okay, right. After that is add gains. What gains had I received? Okay, so remember, if I had a discount allowed on my purchases, I also had a discount received. Okay. Now, if I do my discount received, again, this is why you need to keep track of your discounts, lads. All right, so like I'll show you exactly, like this is how I keep track of them. I just threw them down on the page. That was literally it, job done, Bob's your uncle. Okay, so don't forget, discount received is only for 5 months, because I'm not actually, it's in the month after sale, if that makes sense. Okay, so it's in the month after sale. Right, so discount received, I've got 1,800 for July, that I pay in August, sorry, yeah, 2,200, 2,600, 2,650, and 3,400 euros. Okay, now there's none for December, because I'm not paying December until January. Okay, so technically it's just blank there. Total all those up and you should get 12,650, 12,650. Okay, So I gained discount received of 12,650. Add that to the above figure, and I should get 213,895. So 213,895. That's called my net profit. No, that's just the way I do it. It's just sales less expenses. As long as you have the figures in, lads. I know that like you could do direct expenses and indirect expenses, but look, I just list them all off together, and that kind of does it. Now, the only other thing I want to do here is just the workings for a few. Okay, so variable overheads, right? How do we do the variable overheads again? So it was sales divided by selling price. Like, I'm just writing this down. You don't even need to write this down as long as you just know. Multiplied by variable overhead price. That's kind of standard enough. You just do that. So, for example, for July, it was 420,000 euros. Divided by 50 euros gives me 8,400. Multiply that by the variable overhead price of 10 euros, and I got 84,000. Right? That's just how you do it. The fixed overheads, as the majority of the time you're going to have to take off your depreciation. It normally includes your depreciation. Okay, so divide it, so depreciation, like, just get the value of the fixed asset, divide it by the number of years, because we're not normally given the rate of percent, so years should give you a figure, so just say, we'll say 8,400, divide that by 12, and you just have to divide it by 12, okay, because if you divide it by 12, there's 12 months in the year, and then you can take that off individually. So, for example, in this case, it was 700 a month. So I just took that away from my fixed overhead figure. So it was 65,000, took that away every single month, and that was absolutely fine. The loan interest and the loan repayment, then this is probably the one that could cause a bit of problem. Okay, so just watch the loan repayment, watch the key dates. Okay, again, you can rewatch this video. There shouldn't be any problems with it. But yeah, that's the. So what I'll do is I'll throw this template up in Teams so we all have it anyway. Okay.